Hi, good morning to one and all. I begin with the company law marathon. Just before I start, I require a small thumbs up from y'all that whether I am audible and visible to y'all or no. So just in the chat box, tell me whether you're ready for the marathon or no. Okay, so the marathon will be today and tomorrow, company law, so we can nicely cover whatever chapters we do properly, thoroughly, covering the past exam questions. Okay, and today I'll be covering the chapters which mainly have the amendments. So whichever topics has the amendments, first we'll be covering those. Okay, so I'm just waiting for you all to put in the chat box whether I'm audible and visible or not. Okay, great. Okay, thank you. Now, if we go to see the how is the chapters placed and what are the chapter wise weightage, if we see the chapters, there are 7 chapters in company law which come for around 70 marks in your portion. Okay, now from here I have covered in my previous marathon. You can go and check the playlist. There I have covered many chapters, especially from the part A. In the current marathons, I will try to cover those chapters which I have not taken earlier. So you can refer my previous marathons. Share and share capital which is coming for around 14 marks in your exams. I have covered as an independent chapter. A single chapter of share and share capital I have covered just in the recent past. So you can go and study from there. Every single thing. You don't have to refer any other thing, material, video, lecture, nothing. Everything is covered from the module and the past papers are also covered. So go ahead and do from there. Okay. In the previous marathons, I've also taken share and share capital. So in the previous marathons, you can go and see. Today, I'll be covering the topic which mainly has amendments and changes. That is your CSR. So I will be starting with the first chapter. That is your corporate social responsibility. Short exam question and good amount of marks will come in your exams from here because it has been amended. Now with me when I'm studying, when I'm teaching you all, I have the CSR notes which we have prepared. Okay, it covers the rules, regulation, everything from the module. Okay, so just be with me. I will be covering this entire thing. Then I also have the past exam papers with me, okay, where I will cover the past exam questions as well. Okay, so the past exam questions from here I will also be covering for company law. Okay, this is the company law scanner. Okay, company law scanner where all the past exam questions have been given with the model ICSI answers. So I will be covering even that. Okay. Social responsibility. So here are your questions which have been asked in the past exam. And don't think this is an easy chapter. It is a chapter which has been amended. Okay. So I will be covering this first. Short 110% what I'm going to teach you from here is going to come in your exams. So are we good to go? Can we start with the chapter? Yes or no? I need a thumbs up, a like button. 44 viewers. All of you all have to hit the like button. So let's start on a positive note. Okay, great. So let's start with the topic called as CSR. Now what does CSR mean? First, corporate social responsibility means that corporates have a responsibility towards the society. Corporates have a responsibility towards the society. Now we will see what is the background of this chapter. How did the CSR come into play? First, a small brief up that listen, even businesses cannot ignore the society. Businesses cannot ignore the society and give away its moral obligations towards the society. Businesses should not only just make profits, but it is the responsibility of the business to give back to the society. Now, CSR is also called as corporate science, corporate citizenship, social performance, responsible business, everything. So a business should ensure that they are taking care of the society. Now all this introduction I want you all to quote and mention when you start the any answer, that CSR is a business concept whereby companies say that they will take and address the social and environmental concerns into their business operations. Now let's see how did the CSR come into play. Okay, how did CSR and who was the first person who brought CSR? Do you all know that? How did the company law first have CSR? Did Companies Act 1956 have CSR? Does any other country have CSR in their act? So let's see. The origin of the term CSR. CSR, now all this you need to quote in the exam, okay? So you can take a screenshot and note it down. CSR was first coined in 1953 by an American economist called as Howard Bowen, and in his publication named Social Responsibilities of a Businessman, and he is referred as father of CSR. So I want you all to quote this in your exam related to CSR. That Howard Bowen, an American economist, coined the word CSR and he's called as the father of CSR. Now coming to India, how did CSR develop in India? How did it come into play? So we need to go to the legislative background, or we have to go to the past. First, the CSR voluntary guidelines was brought in by the Ministry of Corporate Affairs in 2009. So 2009, the Ministry of Corporate Affairs brought in for the first time in 2009 CSR voluntary guidelines, that the company should voluntarily do CSR activities, that they have to give something to the society, help the society, address the concerns of the society, look at the social and environmental concerns should be taken care of, and that should be brought into the business operations by developing eco-friendly products, by taking care of the waters, riverways, by having ensuring that they do not damage the environment unnecessarily. And for this voluntary guidelines, government was voluntarily saying that you give CSR activities. Then the government had issued 6 principles here. The government had issued 6 principles, voluntary guidelines. Now tell me one thing, I want you all to put in the chat box, that if the government is telling you that voluntarily spend, will anyone spend? If the government is telling you that you take activities for benefiting the society voluntarily, no force, no mandate by law, you think people will do? तुमको लगता है लोग ऐसे ही society को help करेंगे? So the answer was many did not follow because it was voluntary. Government thought that they have given less principles. So what happened in 2011? Government launched other rules called as National Voluntary Guidelines on SEE performance, on the social, environmental and economic responsibilities of business, 2011. So 2009 was launched by MCA, then again 2011 guidelines were launched, and this time they introduced 9 principles. They brought in 9 principles. They thought that principles were less, so let us make. So do you think people, if it is voluntary, people will follow? So people were not following even after bringing the 2009 guidelines and 11. So the next is your corporate citizenship beyond the mandate of law. Now the government said that do something beyond what law is telling you, what is mandatory. Go ahead and help the society. Okay. Corporate responsibility is achieved when a business adapts CSR well aligned to its business goals. So what is your business goals? With that, you also have to see what is the social concerns, what are the problems in society, what are the environmental concerns. जो भी surrounding में issues है, उसको भी तुम help करो. So then they coined the word called as corporate citizen. Just like a citizen has duties, it is the duty of the corporates also, since they are citizens, to help the society. So corporates such as concepts such as CSR, corporate citizenship have become well established and were internationally used concepts. Now what happened? The major shortage of CSR guidelines that was launched was that they were not mandatory, they were voluntary. So what happened? 2009 voluntary guidelines, 2011 voluntary guidelines. So government realized that there is an absence of statutory mandate, statutory obligation, compulsion. Government is not compulsory telling you. Then they said, wait a minute, people are not going to follow like this. In the Companies Act 2013, for the first time in history, it wasn't there in 1956, government launched under section 135 called as CSR, Corporate Social Responsibility, along with rules under 2014. So let's see. Companies Act section 135 talks about CSR. Now section 135 read with your rules. Now let's see what all provisions are there. Okay, this is a new beginning, and India became the first country in the world to make CSR mandatory for companies to follow. So India is the first country which has told that it is mandatory to do CSR activities. So let's see what all regulations are we going to study here. In company law, there is only one section with respect to CSR, and I believe all of you all must be knowing that is your section 135. However, in exams they are asking you even subsections and points of subsection. So we should know subsection 1, subsection 2, subsection 3, 4, all we will be doing. It has total of 8 subsections. Then they also launched in rules. Rules is in 2014. Okay, we will see the rules also and the schedule. One schedule is important to know and quote in the exam, that is your schedule 7. So what are we seeing? Now we'll be doing Companies Act 2013 section 135. We will be seeing CSR rules 2014, and we will be seeing schedule 7, which gives you the list of activities which can be undertaken under CSR for corporate social responsibility. What all, where all you can spend. Now what does CSR first say? Very simple. If I have to summarize, that corporates have a responsibility towards the society. Now tell me one thing, a loss making company, एक company जो continuously loss कर रही है, उसको compulsory बोलेंगे क्या? Will they tell compulsory for it to give CSR activity? A company which is making loss continuously, every year they are making loss, will we say that help the society? They will say we need help. How we'll do? So CSR is not applicable on all companies. Section 135 subsection 1 says to whom it is applicable. Okay, so this is very, very important. This you have to quote in the exam. Very, very important. Section 135 subsection 1 with the subsection. Okay, let's see. Section 135 says that every company having net worth of 500 crores, turnover of 1000 crores and a net profit of 5 crores or more during the immediately preceding past year, means in last year if they've hit any of these limits, they shall constitute a CSR committee and on them CSR provision will be applicable. So what is the limits? Again, the limits are very simple. Does every company have to give CSR and help the society? Answer is no. Who are mandatory under law? So only companies, every company, whether it is an Indian or foreign company, having a net worth of 500 crores, turnover of 1000, net profit of 5 CR in the immediate preceding year, last year, will have to constitute a CSR committee. Now a question comes that who will be in the committee? I understood that if I hit the threshold, then I have to set up a committee. In the company only, we will have a dedicated committee. This committee will see where to spend the funds, whether the funds are spent properly, सही से spend किया या नहीं, गरीबों में बांटा है या नहीं, whether you've helped the poor. Okay, they will see whether you're doing the activities properly. So a dedicated committee has to be created if CSR provisions are applicable. Now question is, who is there in the committee? Who is in committee, CSR committee? So the answer is composition of CSR committee, which is the amendment I will tell you also and which will come in your exam for sure. CSR committee shall consist of 3 or more directors, out of which at least one should be a independent director. Means it should consist of 3 or more directors, out of which one will be ID. But if a company, not all companies have to appoint an independent director, outside director. Only few companies have to appoint. So where a company is not required to appoint an independent director, it shall have in its CSR committee 2 or more directors. So if ID is there, then 3 directors. If ID is not there, then minimum 2 directors. Not required to appoint directors, ID, then only committee can have 2 or more directors. Next, once you prepare the committee, then next is disclosure. That you have to disclose in the board report, in the report of the board, which goes to all the shareholders, that you have set up a committee and who is there in the committee. The composition of the committee will be given. So section 135 subsection 1 gives you the applicability of CSR. 2 talks about the disclosure of the committee. So if it is applicable, you have to appoint a committee, and this you will have to give a disclosure of the committee. Who all are there? Which are the 3 directors? Which are the 2 directors, etc. Now what this committee will do? What do you think after setting up this committee, what they will do? So let's see. Very simple. Once they know that they have to spend a certain amount for the benefit of society, then this committee will identify areas on which they want to spend. For example, let me take you to CSR of Infosys Limited. See, this is the CSR policy. CSR policy of Infosys. What they are saying, the objectives, that where they will focus on, they will try it, and in schedule 7, all these are schedule 7 activities. See, schedule 7 gives you the list of places where you can spend for the CSR funds. For example, eradication of poverty, development of rural education. So all these areas you can spend your CSR funds. मतलब जो भी पैसा बांटना है वो तुम कहाँ पे बांटोगे? Where all will you give this funds for benefiting the government, for benefiting the society? So eradication of hunger. So this is of Infosys. Rural development, gender equality, for empowerment of women, then environmental sustainability, to promote to preserve any heritage. Now this is all of Infosys, okay? And if you see the annual action plan also has to be given. Every year that committee will have to explain what is the yearly performance of the CSR. Means when our company is there, we have made a committee, we give the money to the committee, you know, itna paisa spend karna hai, spend so much money. They will find out where they have to spend, annual report they will give, impact assessment will be done. What is impact assessment? Whether your activities had a social impact or no. So they will say that we have set up so many toilets, we have set up so many schools, we have benefited so many women. So that impact assessment will have to be made and given. Composition of committee, as we saw. All this, okay? So this is the CSR policy of Infosys Limited. Like that, every company on which this CSR is applicable, they will all make a policy and they will share it with the shareholders. Now let's come back. Functions of this committee. What this committee will do, they will formulate and recommend to the board of directors a policy. Like as we saw your CSR policy. They will give this policy to the board of directors and indicate the activities where they want to, areas they want to spend, and that areas are given in schedule 7. So I want you to quote sections 131 subsection 1, subsection 2, subsection 3 and schedule 7. The amount of expenditure, how much amounts they want to spend, and they will also give details about the monitoring of the policy. Next, if we see the responsibility of the board of directors. Now we see that the CSR committee will make a policy called as CSR policy. And this CSR policy will be given to the board of directors for approval. This board of directors, what they will do, now we'll see. After taking into account the recommendation by the committee, they will either approve or modify the policy and disclose the contents of this policy in its board report and place it on the website. Clear? So what they will do, they will mention in the board report and also on the website. It will ensure that the activities are included in the CSR policy are undertaken by the company. So what they will do, they will ensure implementation, that it has been implemented. ऐसा नहीं कि खाली policy बना के छोड़ दिया. It's not that you've just made the policy and left it. You have to implement it. Then comes amount of expenditure. Now this is very, very important and they ask in the exam also. So you should know section 135 subsection 5 talks about the amount of CSR expenditure. How much money will you give? So then they are saying that 2% of average 3 years net profit will have to be distributed as CSR funds. Clear? कितना बांटना है हमें, कितना सोसाइटी के लिए लगाना है पैसा, how much money do we have to give as CSR funds and spend. This is also called as CSR funds or CSR expenditure. So they say that the board of every company shall ensure that the company spends at least 2% of the average net profits made in the 3 preceding financial year. So someone will say, listen, I started my company in 2 years only, we had the net profit, we became really big, we became a unicorn in 2 years. So they will say, okay, fine, average 3 years you will not be able to remove. Average 3 years profits you will not be able to remove. But 2 years profits remove. So how much ever time you have completed, remove that much time period from its incorporation and spend that. Where the company has not completed 3 years since its incorporation, then we will have to take the average of the time from incorporation till date. Now they are saying preference. If a company is set up in a village, in village A, the CSR funds, तुम्हारे हिसाब से, what do you think? The CSR funds, can they spend in village B, in another state, in another? So they are saying, no, listen, you have set up your company here in this village, help this village, because the villagers of that area, the local area, will also expect that this company has come. So there was a case where there was Anil Ambani, this Reliance Power was set up. Reliance Power was set up in Dahanu area. Okay, it is a village or a place in Dahanu. Okay, now what happened is in Mumbai, in Dahanu they had set up. So what happened? The villagers, the people there expected, the residents there expected Reliance Power to help the Dahanu, that particular place, because they are using the resources, land, everything, raw materials from there. So same way they are saying, give preference to your local areas. the company shall give preference to the local areas around where it operates for spending the CSR activities. Perfect common sense. Now this is the amendment, okay, which I'm telling will come in the exam. Let's see what it is. The unspent CSR funds not related to any ongoing project, transfer it to Schedule 7 fund within 6 months of end of financial year. So I'll be explaining this. Just wait for some time. What they are saying here. Okay. Here. That if there is unspent CSR amount, for example, we had the CSR funds that I had to spend, expenditure that I had to do was of 3 CR. Okay, 3 CR I had to spend. Out of this, 1 CR is unspent. 1 CR is unspent. So my question is, what is to be done of this 1 CR? What we should do? So then law is saying that if whatever is the unspent CSR amount, whatever is the unspent CSR amount, then you see whether it was relating, this entire amount was whether there was an ongoing project or no. Whether there was an ongoing project or there was no ongoing project. No ongoing project. Okay. If there is no ongoing project, कुछ ऐसा था भी नहीं कि कोई project चल रहा है, there is no ongoing project, then they are saying that listen, moment from the end of financial year, moment the financial ends, and now you have this unspent amount, you don't even have something ongoing, कुछ चल भी नहीं रहा है, तो एक काम करो, within 6 months of end of financial year, transfer this amount to a fund given in Schedule 7. What they have said, that within 6 months of end of financial year, give it to a fund in Schedule 7. Now when you read Schedule 7, that entire thing, they have given PM Care, so it's a fund, National Defense Fund. So they have given you certain funds in Schedule 7. Within 6 months, I have to transfer this unspent amount because I don't even have any ongoing project to this fund. Till here it is clear. तो जो भी पैसा बच गया है और मेरे पास कोई pending amount नहीं है, if there is any amount is unspent and I don't even have any ongoing project, I have to transfer within 6 months of end of financial year to this Schedule 7 fund. But if I have an ongoing project, कुछ चल रहा है, then government will say, okay, fine, wait. If I have something ongoing, then I have to transfer within 30 days. See, if it is an ongoing project, then in the next 30 days, of end of financial year, I have to put it into a unspent account. Okay, unspent CSR funds. Now why they have not said directly transfer? Because there is an ongoing project. So then in the next 30 days, they are saying from end of financial year, put it in a unspent account, like how we have unspent dividend account. So like that, a separate account will be made and there have to transfer the funds. In these funds, there will be maximum for 3 years. Max it can be for 3 years. If within 3 years also this is not finished, then it will be transferred to a fund in Schedule 7. Ongoing project is there. Ongoing project now, financial year has ended. Year end ho gaya and I still have some excess money and an ongoing project is made. So I'll transfer to a special account, which will, in that account, it can be up till 3 years. After that, it will go to Schedule 7 if it is unspent. So this is how it is. If there is an ongoing project, then transfer within 30 days to unspent account for the relevant financial year. If unspent for 3 years, then transfer it to a Schedule 7 fund. Okay, within 30 days from the end of financial year. If there is no ongoing project, transfer to Schedule 7 within 6 months from the end of financial year. So let's read the provision so we understand this amendment perfectly. Okay, and then you hit the like button if you understood this perfectly. If the company fails to spend such amount, the board shall, in its report made under this, specify the reasons of not spending, and unless the unspent amount relates to an ongoing project, means if it is relating to an ongoing project, then we will have something else. Here, if it is not relating to an unspent ongoing project, transfer such amount to a fund specified in Schedule 7 within 6 months of expiry of the financial year. Okay. Now, what do you mean by ongoing project? Ongoing means there is a multi-year project. Sometimes if you are setting up a school, it will not get over in 1 year. It might go for 2 years. Maximum law has allowed 3 years. Timeline cannot be more than 3 years for a multi-year project, or any year, any project can be max for 3 years. Okay. Then excess. Now this is also important. It will come in your exam. Okay. This is also a past exam question and it is important from exam point of view. Let's say if a company has spent excess money. Company has spent, CSR fund was 2 CR. मैंने 3 CR कर दिया, तो 1 CR was extra that I spent. Can I say that now in next year I will spend 1 CR less? Yes or no? I want you all to put in the chat box. Can I say that I will spend less? Yes or no? See, law is saying, okay, fine. If you spend extra, that excess amount can be set off in the next year. So next year I will spend 1 CR less. That is absolutely fine. If the company spends an amount in excess of the requirements provided, such company may set off such excess amount against the requirement to spend up to 3 financial years. So in the next 3 years, they will have to adjust it. That excess amount shall be set off, shall not include surplus arising out of CSR activities. We'll see what is this surplus arising out of CSR activities, and the board of directors shall pass a resolution to that effect. Excess spending, let's see. Excess spending. If I have spent 1 CR extra, this can be adjusted in next 3 years CSR requirement. If in 3 years I can't adjust, then in the 4th year I will not be allowed to adjust. So if I have spent extra in the next, within 3 years only, I have to adjust. In the next year, if I have to spend something, I will say 1 CR last year carry forward that I have already spent. Now, it shall not include any surplus arising out of CSR activities. Let's see what is this. This is also very interesting. Surplus. And we have a, that is also important to know. In my opinion, they will ask a question on excess, surplus, etc. Let's say if I'm doing CSR activity generated profits or surplus. Let's take for example being human. Okay, it is a NGO that also has a clothing business. Okay, so you get clothes of being human. Now they use, all the NGO uses these funds. So what happens? They had invested 1 CR and they got a revenue of 1.5 CR. Now this was generated from here only. This only generated. So this became a surplus was of 50 lakhs. This surplus which my business only generated, all this should be reinvested for CSR activities. This cannot be treated as a excess spending. 1 CR, I have, from this 1 CR I got profits. This full amount should be given for CSR spending. So 50 lakh rupees cannot be adjusted in next year. They will say, listen, from this 1 CR which was your CSR requirement, from here only you generated. So this has to be plowed back into the activities for CSR. So this has to be spent for CSR again. Clear? We will see what it means in some time. Now, here we are saying unspent CSR responsibility account. So again, 2022, to pay attention, this is important. What is this? That ongoing project is there. Then what will happen? Then we have to create a unspent CSR account. An amount remaining unspent pursuant to an ongoing project shall be transferred within 30 days from the end of the financial year to a special account to be called as unspent CSR account, and such amount shall be spent in pursuance of its obligations towards their CSR policy within 3 years from the transfer. And such amount has to be spent within 3 years from the date of the transfer. Means in the next 3 years after you put it into the special account, it should be used. If it is not used, if the company fails to spend such unspent amount within 3 years as well, then the company shall transfer it to the fund specified in Schedule 7. So Schedule 7, you will see, they will see a lot of funds, defense fund, PM care fund. So you will have to transfer this there within 30 days from the date of completion of the third year. So if there is an ongoing project, then there is unspent amount will go within 30 days to special account. Till there it can be for 3 years. After that, in the next 30 days, it will go to the fund under Schedule 7. Okay, in my opinion, this will come. Now comes penal provisions. Now, if a company has not failed to comply with any of the CSR laws, CSR expenditure, then they have to comply or explain. They have to either comply with the laws or they have to explain. Approach has been used as a penal provision. Matlab, either you comply, do all that is told by law, otherwise you have to come and explain why you did not do. For non-compliance, you have to give reasons for non-compliance, and there can be penalty levied for non-compliance. That is penal provision for non-compliance with section 135 subsection 6 and 7. For company's default, twice of the amount to be required to be transferred or unspent account, or 1 CR, whichever is less. So what is the penalty? What is the penal provision? Twice of the amount to be transferred to the fund or unspent account. अगर तुमने नहीं comply किया, if you have not complied, तो जितना amount तुमने नहीं transfer किया, the amount that you have not transferred, that will be, that too you will have to transfer, and that much amount of penalty will also be there. Or 1 CR, whichever is less, will be your penalty. For if the officer is in fault, okay, then 1/10 of the amount required to be transferred or spent, or 2 lakh rupees, whichever is less. So there is penalty for professionals also. That is why CSR has become very important. So there is penalty limits given for company and for every officer. The central government may give such orders as it deems fit. Now, treatment of surplus. Now this is again very, very important from exam point of view. Okay, exam point of view, this is very important. Let's see. Treatment of surplus. That if my CSR activities has generated surplus, okay, Like I could set up a fun and fair. From that fun and fair, I have got extra money. This extra money should be reused in the business. So from CSR funds was 1 CR. I generated 20 lakh rupees surplus. This surplus का क्या करना है? Should I company keep it as profit, distribute as dividend, or treat it as excess funding? They say no, this is not excess. You spent only 1 CR. You have not spent excess. तुमने extra नहीं spend किया. From this 1 CR you generated 20 lakh. So this 20 lakh should be reinvested into the business. As you remember, same provision like Section 8 companies. Section 8 companies, whatever profits they receive, they cannot distribute as dividend. It has to be reinvested to promote the objects. Same is here. Any surplus which shall not form part of the business profit, it shall not form part of the business profit. It should be plowed back, that is invested back into the same project or transferred to unspent account. Okay, so plowed back means invested, reinvested in the same project and spent in the CSR policy or specified in the funds within 6 months from the expiry of the financial year. Now exemption, now this is going to come in the exam. So this is going to come in exam. Okay, because this is amendment of 2022. Very, very important. Okay. Exemption from constitution of CSR committee. See, we know under section 135 subsection 1 you have to set up a committee. CSR committee. Yes or no? If you are following. Now they have given you subsection 9 which says you are exempt from setting up this committee. If the CSR, if the amount to be spent by the company does not exceed 50 lakhs, the requirement of constitution of CSR committee shall not be applicable. The functions of the committee shall be discharged by the board of directors. Clear? So, if CSR expenditure is up to rupees 50 lakhs, then CSR committee not required. Not required. Okay, CSR committee is not required. The spending, making policy, administration will be done by board of directors. Clear? Not a dedicated committee, because the amount is very small. It is up to 50 lakh rupees. So again, and you can write the subsection also. This is going to come in your exam. So note it down, 135 subsection 9. Where the amount to be spent by the company does not exceed 50 lakhs, the requirement of constitution of CSR committee shall not be applicable. Functions of the committee shall be discharged by the board of directors of the company. Now we are done with the subsection. So there were total of 9 subsections. Okay. What all we had seen, that a committee should be made. Committee not required if CSR funds are up to 50 lakhs. You have to formulate a policy. The policy has to be put up on the website and should be given in the board report. You have to, CSR expenditure is 2% of the last 3 years net profit, and this has to be disclosed in the board report. Now we are seeing the CSR rules. Now in certain rule numbers also you should remember, so it will help you do it. This is with the rules 2021 amendment was there. Now let's see. Rule 2D defines what is CSR. What do you mean by CSR has been defined under Rule 2D? Okay. Means the activities undertaken by a company in pursuance of its statutory obligation laid down under section 135 but shall not include the following. Now this is very, very, very important. It is a part of the amendment only, that they have introduced the definition of CSR under Rule 2D. They say that the means, what do you mean by CSR? It is the activities undertaken as stated under section 135. But shall not include the following. But shall not include the following. Now very simple points they have given. So this is not CSR. This is not CSR. Let's see, very logical and very important part. What they have said, activities undertaken in the normal course of business of the company. Normally, if I have CSR funds, I spend it in the rows buying and selling of raw materials. They say, how you can use this? It is you're using in the business activity that cannot be used. CSR means helping society. If I'm spending outside India, now they can ask you a question on MCQ, the question on this also, that the activity has been undertaken outside India. So then they will say, no, it cannot be allowed. It cannot be allowed because CSR means that you have to spend in India. Those benefits and all of that. I say, so hungry people are there, such poor people are there in Africa. You will say, what nonsense, why will you spend your CSR fund outside India? It is not going to be counted as CSR. You have to help in India. Only one exception is there. Only one exception. If you are spending for training of Indian sports personnels, okay, at an international level, for example, for the Olympics, if I'm spending on Indian athletes abroad, it is allowed. So only one exception where I can spend CSR activities abroad. Contribution to any political party cannot be counted as CSR. Benefiting your own employees cannot be counted as CSR. Activities supported by the companies on sponsorship basis or marketing benefits for its products cannot be counted. So I cannot give I cannot do marketing with my CSR funds. Activities carried out to fulfillment of any statutory obligation, means law has put an obligation on me to spend tax, to pay the taxes, to build something, to build a factory, to build a canteen within the premises. So that cannot be used as CSR. So this is super important. Okay, take a screenshot, note it down. This is a part of the amendment. Okay, activities undertaken in the pursuance of the normal course of business are not covered unless, now this is also important amendment, unless they are COVID related, R&D related to the year. For example, we know Serum Institute, the Serum Institute, they make COVID vaccines, okay, or they do R&D, so they can invest in their normal course of business. So only one company, one type of company is allowed to use CSR in the normal course of business if they are working for COVID-19 R&D. Then again they'll repeat about CSR responsibility, applicability, whoever it is applicable, they will have to follow. Now this is important in the rule. We understood application, but when it will cease to exist, when this CSR provision will cease to exist on the company, think and tell me. You all can put in the chat box also. What do you think? What do you think if when it will cease to exist? So logic is very simple. If my company for 3 consecutive years is not hitting the applicability, okay, it is not touching the applicability for 3 continuous back-to-back years, then CSR activities will, CSR provision will not apply to me. I don't have to set up a committee. I don't have to spend the funds. Means what? First, let's read the provision, then I will explain. Every company which ceases to be a company covered under section 135 subsection 1, my net worth went down, all those limits went down. For 3 consecutive means back-to-back years, shall not be required to constitute CSR committee or spend for the CSR limits. Okay, thus CSR rules specify that a company does not satisfy the specified criteria for a consecutive period of 3 years is not required to comply with the CSR obligations. Let's take an example. in 2022, 2023, 2024, 2025. We are taking 5 years. Okay, we are taking till 2025. Now here CSR was applicable because my business profits were something like this. My business profits were something like this. This was at my peak. The profits of my business was like this. Turnover, net worth, everything was like this. Just before COVID, let's say my profits was here. This is where my profits were. Now, from here, my sudden drop in profits. My profits suddenly drop. And now it is just like this. So since year CSR was applicable to me, CSR was applicable in 2022. And in the next year, this was the CSR limits. CSR thresholds were here. So I was above the threshold for 1 year. So I have to create a committee, I have to start spending. Now, when it will cease to exist, in the next year only, if my profit goes below the threshold, I still have to do. It will have to go. This year also I will have to do. This year also I will have to do. This year also I will have to do. Because for 3 back-to-back years when it is down below the thresholds, below the threshold for 3 back-to-back years, then in 2026 I will say that it is CSR is not applicable anymore. CSR is not applicable anymore because my profits just went down. Clear till here? So this is important and this can come in your exam as well. Now if we see CSR activities. Now how will you do the activities? Let's say I have to spend for the society, I have to build schools. So 2 methods are there. Either the board of directors decide that let's do it ourselves only. We will set up a Section 8 company. We will create an NGO, a non-profit company, we will set up. Company establishes, company incorporates a company, and then from there they will do. Okay, so let's say we can have Infosys. They will set up a Section 8 company, transfer the funds here, and then this will do the CSR activities. Clear till here? So they will do the CSR activities. Simple logic that Infosys will set up a new company and do it. But let's talk about a small company which doesn't have that much CSR funds. Okay, so then what they will do, they can give it. So there is another company, they can give it to a existing NGO. Existing NGO like CRY, I don't know whether you heard of it, PETA. You can give it to them. Okay, and that is fine. But it is important that this NGO has got an income tax NOC. Very, very important. See, I will come to that also. That is also very, very important. Because what companies will do, they will just set up an NGO, and that from that NGO they will only use the funds for their benefit. Who will go to check? So they say no, the registration under Section 12A and 80G of the Income Tax Act is mandatory. So the NGO, whichever you're giving or creating, if you're giving directly or creating, okay, then that whoever you're giving to, whichever NGO, has to be registered under Section 12A and 80G of the Income Tax Act. Okay, and the NGO to whom you're giving, every board of directors shall undertake its CSR activities through a company established under Section 8. Existing company I find and I give it. Okay, but it has to be registered with the Income Tax Authority. Okay, 80G and 12A. And it should have an established track record of 3 years. It should have an established track record of 3 years in undertaking such projects. 3 years of past experience minimum they should have. Now, you can spent only in India, outside India cannot be given, only for training athletes is allowed, employees is not allowed, ordinary course of business is not allowed, except if your business is only of COVID related activities are allowed for normal course of business. So Serum Institute, you have Johnson and Johnson, if it is India company, they make vaccines, all of them they are allowed. Then comes administrative. Now this is also very important. Okay, very important. It is being brought to the amendment. What they have said, that the expenditure for administrative overheads shall not exceed 5% of the CSR expenditure. Shall not exceed 5% of the total CSR expenditure. What does this mean? See, first we know that for any political party, it will not be considered as CSR activity. That is fine. What does this mean? Administrative overheads is maximum 5% of the CSR expenditure. See, administrative overheads is max 5% of CSR expenditure. Means administrative overhead means what? You will, in making the CSR policy, you must have prepared a scheme, you must have made the structure, you have designed this, you will implement for employees, for spending, staff. Now all this is only administrative day-to-day expense. We want at least 95% should go to the beneficiary. जिसको 95%, 5% तुम्हारा ऑफिस का खर्चा, प्रिंटिंग का खर्चा, इलेक्ट्रिसिटी बिल, all the day-to-day expenditure is fine. Max 5% of the CSR. 95% has to go to the beneficiary. Clear? This is also important. It can come in your exam since it was a part of the amendment. Okay. Now, what do you mean by administrative overheads? Means incurred for the general management administration of the scheme, but shall not include expenses for designing, implementation, monitoring, evaluation of the CSR project. So let's see what it includes and what it excludes. Very important. Administrative overheads includes general administration, management, all this, it is there. It includes all this. So this can be max 5% of the CSR expenditure. But administrative overheads does not include designing of the scheme, implementation of the scheme, evaluation of the scheme, monitoring of the scheme. So all this is allowed, okay, in the 95%. So only for general administration and general management, they have called it as administrative overheads, maximum 5%. For designing, implementation, evaluation, monitoring is allowed because it is not covered under the definition of administrative overheads. So what they've given, administrative overheads shall not include expenses for designing, because that all is genuine expenses, implementation, monitoring and evaluation of the CSR project. Now CSR committee we saw. Tell me one thing, every company has to appoint committee, even foreign company, yes or no? Obviously anyone who is hitting the threshold in 135 subsection 1 has to do. So the company mentioned in rule 3 has to appoint, they have to appoint independent director if there is one. If there is no independent director, then 2 directors, and they shall disclose the composition. Same thing. CSR committee is not required if the amount spent does not exceed 50 lakh rupees. In all cases, it shall be discharged by all the functions by the CSR committee. Now what is the CSR policy? Now what is the CSR policy? Same policy is where all you see, if I give you funds, CSR funds, there are so many social activities you can undertake, so many things. Now from where you want to pick and choose, that will be your policy. So some want to spend for welfare of animals, some want to spend for defense, some want to spend for eradicating hunger. So all that list is given in schedule 7. So if you see in your modules, you will see a schedule 7 which gives you the list of activities: eradicating hunger, poverty, gender equality, women empowerment, environmental benefits, your PM cares, defense funds. All of that is allowed. So the policy shall specify. They will also say that within how you plan to spend, the timeline of the project, etc. CSR policy shall include the approach and directions given by the board of directors, guiding principles for selecting, implementation and monitoring the activities, and formulation of action plans. Now, CSR expenditure, how much it is there? 2% of the average 3 years net profits for 3 consecutive years. If you are within the threshold, then CSR provision will no longer be applicable to you. CSR reporting. Now, this is also very, very, very important. Okay, since it is a part of the amendment. So 135 with the rules has been revamped completely. So this lecture is very, very important to watch it and not watch anything which you have done previously. Okay, unless it is covering the amendments. So the board report of the company shall include an annual report on the CSR containing the details of the CSR activities. Schedule Annexure 2 mandates additional disclosures. What disclosure will you give about the project? The impact assessment. Now, what is an impact assessment? We will see. You will give how much you are carry forwarding, how much excess spending you had done, what was the surplus amount, what is the administrative overheads. All the disclosures will be given. What kind of social impact did it have? Was it a success? Or it wasn't a success? Unspent amount, details regarding the capital assets. Sometimes you have bought in capital assets also to maybe manufacture COVID instruments, etc. Now this is super important. Very, very important from exam point of view. It has also been asked in the past exam question. What is impact assessment? They have asked what is impact assessment. Okay. First, impact is very simple. Whenever I invest in a project, whenever we invest in projects, we ask for the return on investment. Return on investment. Yes or no? Investors now normally ask, what is the return on my investment? Here, what are we looking for? Monetary return or social returns? So here we will see that the money that we have spent, what kind of a social impact it had. Social returns kitna tha? Was it a success? Or did we actually be able to achieve it or no? Okay. Now, impact assessment is an assessment. It is an analysis of the social impact of a particular project. Impact assessment intends to evaluate the social return on an investment. It is a retroactive view. We look at the retro view, like our past performance. How was the activities undertaking? It is retrospectively seen. Past, we will see that what was the performance of the year. Impact assessment is a seemingly another step to encourage companies to consider decisions before deploying CSR amount. Imagine there can be two things: either we are successful or not successful. When we are successful, we can give rewards to the management, we can brag, we can write everywhere that we have set up so many schools, we have helped so many people, we have reached out to so many people. And if it is a flop, then we can do corrective measurements. Company will look whether they were successful, they were not successful. This shall not only serve as a feedback for the company to plan and allocate resources, but also deepen the impact of CSR. So you have to explain what was the benefit got from your investment. Since impact assessment is a cost intensive, time consuming, the idea is to only certain classes of companies which have large amount of spendings have completed their large projects. Rule 8.3 of requires the following classes of companies to conduct impact assessment. Okay, so you can mark it as super important. Not all companies have to do impact assessment, because to do an impact assessment you have to find out research. It is additional costing. So only certain classes of companies which have large amount of spending, they only have to do impact assessment. So who are they? A company having the obligation of spending an average CSR of 10 crores or more in the 3 preceding financial year shall undertake impact assessment. So companies having an average CSR of 10 crores or more in the 3 preceding years shall conduct an impact assessment. So impact assessment, okay, is to be done by companies who have to spend on an average of 3 years 10 crores or more have to do a impact assessment. Clear till here? So take this as a note, it will come in your exam. CSR is a short question, and I feel the amendments are so many that they will definitely ask around 10 marks from this question. 5 to 10 marks you will expect. Impact assessment is to be done in respect of CSR projects having an outlay of 1 crore or more, which have been completed not less than 1 year before the impact assessment study. Now what is this? Impact assessment is required to be done in respect of CSR projects which have a outflow investment of 1 crore or more. So impact assessment will be done in respect of projects which have investment of 1 crore or more and not less, that means at least 1 year before the undertaking the impact study. So if I'm taking the impact study today, in the past I must have already spent 1 crore or more. Okay, so at least 1 year has passed, that means 1 crore has been invested. After 1 year we will see the impact. So it is a historical assessment. Matlab in 2016 I have spent on a project 1 crore or more. So 1 year has lapsed. Now I will do assessment of it, because at least ongoing, if you do assessment, what sense it will make? At least time should pass, 1 year should lapse, then you will do an impact assessment of that project. Impact assessment is to be done by an independent agency, by a third party agency. You will have to hire them who will do. Could be a group of auditors. The impact assessment shall be placed before the board. Impact assessment expenditure for the financial year should not exceed more than 5% of the total CSR expenditure. So the impact assessment expenditure shall not be more than 5% of the total CSR expenditure, or 50 lakh rupees, whichever is less. So please take a note of impact assessment. It will come in your exams. Then again, one more important thing is about listed companies. Okay, listed companies have to follow some top 1000 listed companies. The business responsibility sustainability report has to be given by the top 1000 listed entities from financial year 2020 to 2023. See, what is this business responsibility sustainability report? Businesses have a responsibility towards society. They have to operate in such a way that they will be sustainable in future. They will sustainably, that is prudently, sensibly use the natural resources. So SEBI has now introduced new requirements for sustainability reporting by listed companies. So it is applicable only to listed companies, top 1000 listed companies. So please write in your exam, this is the latest one, 2022-2023, that top 1000 listed companies will have to give a report, business responsibility report, that what measures have they taken, what steps have they taken to help the society. It provides an annual report that discloses the initiatives taken from the environment, social and governance aspect. It is an annual report that discloses the initiatives taken from them for environment, social and governance aspects. Now, display of CSR activities on the website. So all the activities that you have done has to be displayed on the website. The government has created a dedicated portal called as csr.gov.in. Okay, it gives you the data of all the companies' sector-wise performance. Okay, of all this. So if I just take you to their website, this is the government's website. Okay, this is the National CSR portal, where I will come to know data sector wise, who got the awards for CSR, news updates. I can also explore extras company wise data, how much spending has been done, which sector they have spent everything. Okay, so the government has set up this CSR India. I come to know how many companies have participated, total number of companies, how much fund has gone for CSR, which states are giving how much. So if you see here, okay, this is the full CSR. I can find out how much money has been given. So if I go to see, in Tamil Nadu, they have spent how much? 1000. So state wise data will be coming to know. So which states have given the maximum one? Maharashtra, then Gujarat, then Karnataka, Tamil Nadu, Andhra Pradesh. Okay, all these states. And I come to know that CSR spent by top companies. So this is central data. Reliance Industries spent 992 crores. They have spent 674 crores. Okay, amount spent in crores. Company wise data we'll come to know. How many companies are coming? PSU, how many companies are there, etc. So this is a government website containing all the data of CSR. So this is your National CSR gov.in. Responsibilities of the board and the CFO. The board shall be responsible to satisfy that the funds have been utilized. They will monitor, they will make any modification. The CFO will be responsible, Chief Financial Officer will be responsible for the financial management, and he will have to certify as to that also. Okay. Then we are going to see annual action plans, that annually they will have to formulate what action plans have they taken, the list of CSR projects undertaken, manner of their execution, where they have utilized, and monitoring. On recommendation of the CSR committee, annual action plans may be altered by the board of directors. Then National Unspent CSR Fund. The government has now recently set up National Unspent CSR Fund for the purpose of transferring all the unspent amount. Remember we had said that all the unspent amount will be transferred to a fund. So the government has also made one additional fund called as National Unspent CSR Fund. CSR 1 form number. Okay. Mandates entities undertaking CSR to file form CSR 1 from 1st April 2021. All undertakings, all these entities intends to undertake CSR activity should mandatorily register themselves with the ROC by filing CSR 1. CSR 1 has to be filed by all companies on whom CSR is applicable. It will be digitally signed by CA, CS, CWA, anyone. A unique CSR registration number will automatically generated and given to the company. So CSR 1 is filed by all companies on whom CSR is applicable. And CSR 2, the Ministry of Corporate Affairs in 11th Feb 2022 states that every company covered under section 135 shall furnish a report in CSR 2 to the registrar to the preceding financial year onwards. What will this report cover? All the details. Okay, all the details of what they have done, where they have done. So CSR 1 and 2 is, CSR 1 is on application, CSR 2 is every year. Now coming to computation of net profits. Remember we said that 2% of the average 3 years net profit, 3 years net profit is to be done, is to be transferred as CSR expenditure. This much they have to spend. Now this net profits is calculated under section 198. So for us, we just have to open the balance sheet. The chartered accountant would have prepared it. We will look at what is the net profits made. Chartered accountants will actually have to refer 198 for what all while preparing the accounts. So they will prepare, we will have a direct, we should know from where it has been derived. Section 198. Okay. The net worth, turnover will all be mentioned in section 198. Every company will have to report a standalone net profits. They have to tell what is their standalone net profits. Now coming to Indian company. So again, very simple, 3% of the average net year profits as per section 198. Foreign companies, in case of foreign company that has a branch, CSR provision will be applicable to that branch. For example, we have Hong Kong Shanghai Bank of India. Now it is there in USA, it is there in in Russia, it is there in Hong Kong, that is in China, okay, and it is also there in India. So when we are computing, we will just be concerned with the branch in India, okay. So CSR policies will be applicable only to this India branch. Dividends received from other companies. Now this is also very important. A question can be framed from here. A question can be framed from here from the exam point of view. It has never been asked, but this is important to understand. Okay. Let's see what is this. Dividends received from other companies in which need to comply with the CSR obligation would not be included in computation of net profits. A company receiving dividend as a shareholder does not have to consider the amounts of net profits, such amounts into the net profits for CSR expenditure because shareholder need not spend on CSR activities separately. Let's understand. Put in the chat box, can one company invest in other companies? Yes or no? Can one company invest in another company? Yes or no? Yes. So company A can invest in company B. In company B, okay? Company A invest in company B. Now this company has given dividend. Company B has given dividend to company A of rupees 30 lakhs. Tell me one thing, should this dividend be included in net profits of company A for the purpose of computing CSR? Now what will happen? This company has already done CSR activities. Company B must have already done CSR activities. Here this company is receiving this as a shareholder. So if my company is receiving dividend, this dividend will not go in net profits, and from here I don't have to distribute CSR funds. Why? Because the company which has given dividend has already spent that amount for CSR. Now as a shareholder, I don't have to spend again on CSR activities. Clear till here? Okay, tax benefits under CSR, very, very simple, that I cannot spend for social purposes and then ask tax benefits. So no tax benefits or exemptions have been given under CSR activities. If you spend for CSR, you cannot ask. Now government has now started giving a lot of awards for CSR. That is called as a CSR awards. Now the category of the awards, okay, you can read it up. That Ministry of Corporate Affairs has instituted a National CSR Responsibility Awards, and they start giving these awards. The Honorable the first national CSR award ceremony was organized on 29th October 2019 with the Honorable President of India as the chief guest. The objectives of these awards, why do you think we are giving these awards? Is to encourage companies, to recognize companies which have done this act, to increase competition. So once you come to know that Reliance Industries have got an award, so Tata's might want to work harder to channelize the CSR activities so that the benefits of these activities reach out to the marginalized sections of the society. So what happens once you give the award? With that, they will get encouraged and try to help more and more people, and people will also come to know that these activities are going on. They've kept different categories for the award, like as we have in Filmfare, Best Actor Award, Best Actress Award, Best Movie Award. Same way here they have given you different categories. Companies, awards among companies having more than 100 crores, having above 10 crores, above 1 CR, below 1 crore. So different categories of awards have been there. They've also given area-wise awards for the southern, for the northern, eastern awards have been given. Then awards in specific categories also: education, skill development, agriculture, healthcare, environment. All these awards in specific categories. So that is it. We have completed with the entire chapter. Now we'll go to the past exam questions. Okay. Let's see what questions that they have asked. Okay. Now, a Mind Game Limited is a subsidiary of Indian Guru Limited. Okay. That it attracts the provisions of section 135, and its minimum average collection to spend for CSR amount is 10 crores in each of the preceding 5 years. What do you mean by impact assessment? Whether impact undertaken is by all companies, and who can conduct impact assessment. So very, very important. Independent agency will conduct impact assessment. Those who are having 10 crores or more. Let's see. Impact assessment is to show the social impact of your performance. It is to be done. The following class of companies are required to do impact assessment. The minimum average CSR obligation is 10 years or more in the immediately preceding 3 years. So they will have to do in each of the 3 years they have to spend more than 10 crores. CSR obligation will be applicable, and having projects of outlay of minimum 1 CR and at least 1 year has passed from it. So you will have to do. So 1 crore projects also impact assessment will have to be done. Impact assessment will be done by a independent agency. Then they've asked, is incorporated as a small company. Okay, now remember it is incorporated as a small company with reference to the legal provision. Explain the setting up of CSR committee. So this is the applicability. As per section 2 subsection 85, okay, means a company other than those who have these thresholds is incorporated as a small company. It does not meet the criteria as specified under section 135. So if you go to see, obviously it is 500 crores or more, 1000 crores or more. So small companies will not come here. So small companies do not fall under CSR activities at all. Then companies carrying out a project under CSR activities, some of the employees are working in this project. The company wants to monetize an account it as CSR expenditure. Can it do so? Advise the company. Now they have issued a special that involvement of employees will not, no doubt, generate interest and pride. However, monetization of such activities would not be counted as CSR activities. And that is it. So we are done with the full CSR chapter. Any exam question will come from what we have done now only. Okay, so don't have to worry. Now we'll take a short break and then we'll start with another topic which has amendments. That is your dividend. Okay. That is your distribution of profits chapter. Now, moment the distribution of profits are there and amendments are there, the chances that it will come in the exam increases a lot more. Okay. So now we'll take a short break and then we'll come back and we'll do your dividend chapter. Now, let me just put up on this the dividend chapter. So till here you can go ahead, revise all your topics of CSR, finish it from the module. Okay, then we will start with our other second half of the chapter. So we will just take a break and then we will come back to complete this chapter. Any other topics you want? So I also have tomorrow. So today and tomorrow there is a session. I have kept it in two parts so that we are not rushing. Whatever we do it properly, that we cover from the exam point of view also. So you all finish CSR and then we will come and continue with this chapter. Now, what time will we come back? I think we can come back on we resume at 1 p.m. Okay, 1:10, 1:15 we will resume. So that is it. Go ahead, hit the like button, inform your friends. Okay, especially for those who want in English, I'm holding these lectures. Okay, so go ahead and inform your friends, share this link, and I will see you all and complete dividend topic entirely with the amendments. See you all at 1:15. Am I audible to y'all? I just require a small thumbs up from your end. Okay. Now, just a small clarification so that it's easier for y'all. Okay, I just require a thumbs up from y'all. Am I audible? Okay. So basically, just a small little, clarification. Someone was asking about the small company. Now, small company is defined under section 2 subsection 85 of the Companies Act. Here in 2021, okay, they had amended the level till date. Okay, the limits were in 2021. There was an amendment where they said that a small company is a company whose turnover or paid up capital, okay, so turnover is 2 crores and they had increased the limit from 2 to 20. Now this old limit, this increased limit will be applicable from June 2023, okay, not from December. So you will write the old limits only of 2 CR. Okay. Yes. Great. So the new limits which are there, which is of 4 crores and 40 crores will be applicable. You can mention it in the exam, but it will be applicable from June 2023 exams. In your exam, you'll write the older limits and you can make a mention definitely that the limits have now been revised to this. So you will be safe from both ends. Clear till here? So the limits you can mention it and it will be, you can mention both the limits and you can put it up. So here they had given that the limits for the small company, limits that they had given was small company limits have been below 4 crores and turnover 40 lakhs. Okay. Paid up capital and this. Now, so this I'll cover it up also in the other chapter. We'll take it up. Now we'll start with the dividend chapter in just 5 minutes. Okay, so you can keep it with you. This is the new element. So we'll start in 5-10 minutes. We'll start with the dividend chapter. So you all can open your modules and we'll complete it. So just, am I audible and visible to you all now? Am I audible and visible to you all? Yes or no? Okay, so take a note of the definition. Since there was some confusion, you all can take a screenshot of this, okay, which it talks about small companies. Now remember that a small company is defined under section 2 subsection 85, and it defines it as a company which has a paid up capital of max 2 crores and turnover of maximum 20 crores. This was to be written in your December 2022 exams, 2022 attempt. Okay, this is to be taken in your exams. December 2022 small company definition is a company which has a paid up capital of maximum 2 crores and a turnover of maximum 20 CR. Till here it is clear. For June 23 onwards, you all will write the paid up capital. A small company's definition has been revised and it has stated that a paid up capital of max 4 crores and a turnover of max 40 CR. This you will write from June 2023 onwards. Okay, so in December attempt you will write 20 and 2 and 20. Clear till here? Now why is that? Because the amendment has come in September 2022. Okay, it has come in September 2022 effective. So for December attempt, anything which is there 6 months prior, amendments come in for exam. Clear? So what is a small company? A small company is having a paid up capital of max 2 crores and max turnover of max 20 CR. This is for your December 2022 and that is why I've told you to write that. You can however make a note and you can also say that however from 15 September 2022 the limits have further been increased to 4 and 40 crores. Clear till here? Take a screenshot of this and I hope this has helped you understand the definition, what is to be written. Clear till here? I want a thumbs up if you understood. Mention in the chat box if it's clear with you. So now we'll begin with the next part, that is your dividend chapter. Clear till here? Yes or no? Okay, great. Now we'll be starting with the dividend topic. Now what do you mean by the term dividend? Dividend is nothing but distribution of profits among its shareholders. So whenever a company declares dividend to its shareholders become very happy because for them they know that the company has made profits and they're distributing the profits among its shareholders. Now we need to know the provisions behind and the legal framework behind dividend topic. So the definition of dividend is given under section 2 subsection 35. This is the definition of dividend. The provisions of dividend under company law is covered in chapter 8 from section 123 to 127. The rules for dividend is given under the dividend declaration and payment of dividend rules 2014. And there is a very important separate rules that they have made is IPF, Investor Education Protection Fund, Accounting, Audit, Transfer and Refund Rules 2016. Now why did they make this in 2016? All the unpaid dividend which companies could not pay to the shareholders because they were unavailable used to go in IPF. Now IPF itself had so much money that we needed to make a authority for it to regulate that fund, to see where the money is coming, where it is coming properly, where it is being spent, etc. So IPF, Investor Education Protection Fund, Accounting, Audit, Transfer and Refund rules. And also you will mention the secretarial standard that is applicable, that is SS3. SS1 is for board meetings, SS2 is for general meetings and SS3 is for payment of dividend. Clear? So this, take a screenshot, you have to mention this and quote this in your exam. Now let's understand the meaning of the term dividend. Now dividend has come, the origin of the word dividend has come from the word dividend, Latin word dividendum, which means to divide. Dividend means to divide. Now what are you going to divide? You're going to divide the distribution, you're going to divide the profits among the shareholders, is going to be divided among, that is called as dividend. Now the definition, let's see what the definition is given under Companies Act. This you need to quote. Section 2 subsection 35 defines dividend to mean dividend includes a interim dividend. Now it did not explain what is dividend or anything. What did they say? They gave a inclusive definition saying that dividend includes interim dividend. Now dividend could be of two types, means dividend includes interim dividend. So all the provisions of dividend, final dividend also applies to interim dividend. Now let's understand what is final dividend, what is interim dividend. Final dividend is declared at the annual general meeting of the company. So this is declared at the AGM only. Whereas interim dividend is declared between two AGMs. Between two AGMs, it is declared by BOD, Board of Directors of the company. So let's take an example. The company has made profits. They call a AGM. At the AGM, they ask that we've got profits, should we distribute? If people say yes, then the dividend will be declared and given to all the shareholders. Now, once the AGM is over, company checks its quarterly performance. In the quarter, if they came to know that they made good amount of money, then they can't wait till the next AGM. So in between two AGM, the board of directors can come out and say that this quarter we have performed extremely well and we have so much profits, we want to distribute among the shareholders. So what is a final dividend? A final dividend is declared at the company's AGM. Now understand, once the dividend is declared, once you told the shareholders that you will distribute the profits among them, then it is a mandate on the company to give to the shareholders, and it becomes a debt enforceable against the company. So that means if company has declared dividend and has not given dividend to the shareholders, then the shareholder can file a case on the company and tell the company that listen, this company had in the AGM, they had told that they'll give dividend, till date I have not got dividend. So it becomes a debt on the company, means this dividend amount has to be given now to the shareholders. Dividend can be recommended by the board of directors and approved by the shareholders for final dividend. So in AGM, first the board will recommend and the shareholders will approve. Section 134 subsection 3K says that the board must state in the director's report the amount of dividend which is recommended to be paid. Section 3 defines the final dividend so as to mean that the dividend recommended by the board of directors and declared by the members at the AGM. So what does SS3, Secretarial Standards 3 say? That final dividend means the dividend recommended by the board and declared by the members at the AGM. So don't forget to write SS3 also. Now what do you mean by interim dividend? Declared between two AGMs, and it is declared by whom? By the board of directors. Now what does interim dividend, how it has been defined under SS3? It says that the dividend declared by the BOD. So dividend declared, if it is declared by shareholders, then it is final dividend. And if it is declared by the BOD, it is your interim dividend. That's why it's called as interim. So now let's see, sometimes they ask the difference between final and interim dividend. First, there is final dividend is what? Is recommended by board and declared by shareholders. Interim dividend is declared by the board of directors of the company. It shall be declared at any time before the closure of the financial year. Before the year ends, this is declared at AGM. Final dividend, it is declared before preparation of the final accounts. Obviously, accounts is made at the year end. final accounts. So before that it is declared. This is declared after preparation of final accounts, because at AGM the final accounts are distributed to the shareholders. So that means it is already prepared and then the shareholders do. Authorization of the articles is required. No authorization of in the articles is required for giving final dividend. Means the AOA should contain a provision giving a power to the board of directors. So board of directors will get a power in the AOA to declare interim dividend. Only then they can do. It can be declared more than once. This can be declared, since AGM is held only once. Final dividend can be declared only once. Board resolution is required to pass interim dividend. Here you can pass at the AGM by passing an ordinary resolution. At AGM, an ordinary resolution is, after an ordinary resolution, you can declare a final dividend. Then BOD board resolution is required to be passed in board meeting for the payment of interim dividend. At AGM, ordinary resolution is required. Here, for declaration of interim dividend, you require board meeting, board resolution. Here you require AGM and ordinary resolution. Now it is declared between two AGMs. This is declared at AGM. I hope this concept is clear. Now, a very regular question that they keep asking, that revocation of dividend. Can dividend once declared be revoked? So the answer is a simple no. Dividend once declared cannot be revoked. What about final dividend and what about interim dividend? Can interim dividend once declared be revoked? Yes or no? Can interim dividend be revoked? So the answer is very simple, that no. Even final dividend cannot be revoked and the interim dividend also cannot be revoked. Why? If you read the definition under section 2 subsection 35 of dividend, it says dividend includes interim dividend. That means whenever they say dividend, they also mean interim dividend. So when they are saying dividend once declared becomes a debt on the company, cannot be called back. So that means even interim dividend cannot be cancelled. Dividend once declared becomes a debt on the company and must be paid to the shareholders within 30 days. Dividend once declared, whether it is final or interim, cannot be declared. Dividend includes interim dividend signifies that all the provision of final dividend are also applicable to interim dividend. Okay. However, in exceptional cases when there is a war, there is a sudden tax liability, or if the company, some contingent liability has materialized, okay, in such exceptional cases, the board of directors with consent of all the shareholders can revoke dividend. So the general rule is dividend cannot be revoked, but in exceptional cases it can be revoked, that too if with consent of all the shareholders. Then this is a very interesting topic which is called as right to claim dividend in Bacha Guzdar versus CIT. Okay, right to claim dividend. Now tell me one thing, as a shareholder, can you demand the company to give dividend? Yes or no? Do the shareholders have a right to claim, demand dividend? Answer is a simple no. If company declares, then they can demand, but before declaration, no shareholder can go and force the company to declare dividend. So dividend is a discretionary right of the BOD, the board, only when they recommend. That is when the shareholders can ask. Before that, it cannot ask. So right to claim dividend will only arise after it is declared by the company in the general meeting. Okay. Till then, there is no claim against the company. Okay. Now comes dividend by section 8 company. Section 8 company is NGO. Okay, not for profit company. So companies in section 8 companies can also make profit. They are not meant for profit, but even if they make some surplus, some profit, this profit cannot be distributed as dividend. Instead, it has to be reapplied to further the objects, and the amount should be reapplied to further the objects of the company. Then in SS3 again, they have said that discounts are not dividend. When the company says dividend, they mean dividend. You cannot attribute a discount coupon to a dividend, because discount coupon is also giving some benefits, financial benefits. It cannot be said that discount coupons are dividend, which is obvious. Now coming to the sections for dividend. That is your section 123 to 127 talks about dividend. Okay, we will see all the sections, and I can assure you will remember all the sections under Companies Act. Now section 123 talks about declaration of dividend. Sources of dividend. Company wants to distribute dividend, distribute the profits. From where they will get the money? So they will get the money from out of the profits of the current year, out of any previous year, or out of both. So I can take some amount from current year's profit, some amount from my past year profits. Past year profits means reserves. I can distribute dividend. But this is only after providing depreciation, etc. So the net profits can be distributed. Now one very big problem in the Companies Act has with unrealized gains. Something which is unrealized, notional profit cannot be distributed as dividend. Common sense. If I have not realized the money, I have not got the money, how I can give dividend from there? In computation of profits, any amount representing as unrealized, notional gains, revaluation of assets, okay, any change in amount of assets, okay, at fair value shall be excluded. So if I have revalued my plant and machinery, I have revalued my building, and I know that the money is more, the valuation more, but that cannot be considered to be profits because it is not yet sold and you have not realized. Very simple. Then out of the profits provided by the government, whether central or state government. Next is transfer of profits to reserves. So whatever profits have been made, transfer of profits to reserves. Now understand what happened is company is distributing dividend. So what will its reserves will come down. So they say as a prudent policy, if the earnings of company is 1 CR and out of that you want to declare 20 lakh rupees as dividend, 20 lakhs as dividend. Okay, so company will have only 80 lakhs left now for the business activity. They are saying don't use this full 80 lakhs. Out of this, as a prudent business policy, some amount should go to reserves as well. मतलब जो dividend दिया उतना similar amount or some amount should also be put back into the reserves. So whatever dividend has been given, okay, I distributed as a shareholders. Now the reserves have become less now. So a certain amount of profit should be put back into the reserves and company should not reuse it for business activities. Clear? So what are they saying? A company may transfer such percentage of profits as it may consider appropriate to the reserves. So whatever they feel that some amount should be put back into the reserves, they can do, and balance amount they can use in day-to-day activities. Now what happens is sometimes new companies, even if they don't have much profits, they want to declare dividend. Why? The reason is to maintain goodwill, to keep the shareholders happy. What most of the shareholders don't even look at the balance sheet. They feel that if their company has given dividend, means it is very good. So can a company declare dividend out of the past year profits? Yes or no? Can the company declare dividend out of the last year profits? Answer is yes. This comes in the exam. So market is important. So this is important. Okay. And you have to remember rule 3 for it. You have to remember rule 3. So what does rule 3 say? That if you want to declare in case of inadequacy of profits, the company can do so by plowing back into the reserves. मतलब जो पहले का पैसा है reserves है, current year में profits नहीं है. In the current year you don't have profits, so you can go back to the past year profits, that is your reserves, and distribute. However, you have to fulfill certain conditions we given under Rule 3. The rate of dividend should not exceed the average rates of the past 3 years. So the rate of dividend that you're giving is should not be more than 3 years. So if last 3 years I'm giving at a rate of 10%, then I cannot give more than 10% from the reserves. Total amount to be withdrawn. So how much amount I want to withdraw, that also cap they have given. Shall not exceed 1/10 of the sum of the paid up capital plus free reserves. So the maximum amount that can be withdrawn, max is 10% of paid up capital plus free reserves. Now why like this? See, understand, company doesn't have current year profits, but it is still giving profits out of past year. So it is very risky. Past year में से दे रहे हैं, अभी profit ये साल, this month year is not even profitable. Still I want to give. So the government, so the laws have said that listen, don't give too much. Don't withdraw big amount. Pay off your all the past year losses. Please first set it off. The balance in the reserve should not fall below 15%. So balance in the reserve should not fall 15% of the paid up capital of the company. Okay. Now coming to the next one. Dividend to be declared from free reserves only. Very, very simple. So we saw Rule 3. Maximum withdrawal is 10%. Reserve should not fall below 15%. Average rate should be maintained. Should not be giving a dividend higher than the average rate of the 3 years. So these points you have to remember, and after setting off the losses and paying off for the depreciation. So these are the conditions. Next, no dividend shall be declared from its reserves other than free reserves. Free reserves, what do you mean? So you can except from free reserve. Now what do you mean by free reserves? Free reserves is defined under section 2 subsection 43. Reserves, what do you mean by free reserves? So reserves which are as per the last audited balance sheet is considered to be free reserves. The following shall not be treated as free reserves. First is any amount representing as unrealized gain, notional gains, revaluation, whether shown as a reserve, any change in the assets or liabilities shall not be treated as free reserves. Let's understand. The following shall not be treated as free reserves. First, unrealized gain, जो अभी तक मिला ही नहीं है, what you haven't got till now is not free reserve. Notional gains, it is I feel I will make a gain of so much. Revaluation of assets, I revalued my assets, so I came to know now it is more valuable. All this does not give me real cash in my pocket, so from that is not to be treated as free reserves. Any change in the assets, carrying amount of the assets, so if I carry the amount next year at a higher price, should not be treated as profits, free reserves. Okay. Declaration of dividend by set off of the previous losses and depreciation, only then I can give the dividend. No company shall declare dividend unless the previous losses and depreciation should be first be provided. This we are doing section 123 called the declaration of dividend. Depreciation has to be paid as per schedule 2. So if you go to read the schedule 2 of the Companies Act 2013, they talk about depreciation. Then next is declaration of dividend. Declaration of dividend. Interim dividend. Now who declares interim dividend? The BOD. The board of directors of the company may declare interim dividend at any time during the financial year, okay, before the annual general meeting, out of the profit and loss, okay, out of the past year profits, they can declare. But they will have to ensure the same rules as given in Rule 3, that all the losses should be set off and shall not declare interim dividend at a rate higher than the average 3 years rates of dividend. So if the average in the past 3 years have given a 10% only, This year, when I don't even have profits, I can't give more than 10%. They've said keep it less, not more than the average 3 years net profits. Then this is a very important point. Amount of dividend to be deposited in a special bank account. Okay, amount of dividend to be deposited in special account of bank. Now understand, if a company has declared dividend, from there they have to give to all the shareholders all their bank accounts, some checks will be issued, some direct transfer will be done. So how will you do it? So they do not take it directly from the company's account. Let's say if this is the company's account, whatever they will, from declaration from next 5 days, within next 5 days of declaration of dividend, they will create a new account, okay, for dividend payment. They will transfer this amount here for dividend payment, how much ever has to be given as dividend. So company will know now how much dividend they are going to give. That much amount will be kept separately. Okay, so let's read. The amount of dividend shall be deposited in a scheduled bank in a separate account within 5 days from the declaration of dividend. Now one exemption notification has been issued that government companies do not have to comply with this 5-day provision. So many exemptions have been given to government companies from following the law. Next is section 123 subsection 5 says that dividend can only be given in the registered shareholder's name and his account. Okay, obviously you cannot give it to anyone else. No dividend shall be paid in respect of a company except to the registered shareholder's account and shall not be payable except in cash. So dividend cannot be payable except in cash. You cannot give it in kind basically. So you can hit in someone's bank account, you can issue checks, you can give all of that where cash will be deposited. So here they say not except in cash means except in cash means only cash, cannot real hard cash. You can have checks, NEFTs, online transfers, everything covered, but not in kind. Capitalization of profits, that is bonus shares, so shall be deemed to prohibit the capitalization of profits or reserves for issuing fully paid bonus shares. So if the company wants, see, understand, company can issue dividend in the form of stock dividend or in the form of cash dividend. Okay, here section 123 we are talking about this, section 123. Okay, cash dividend where they will transfer in your account. Stock dividend is nothing but your bonus shares. Section 63 of the Companies Act talks about bonus shares. Clear? So that time you have to follow those provisions, but they are called as stock dividend. Mode of payment. How will you make the payment of dividend? Now mode of payment could be in the form of cash. So sometimes company can give hardcore cash. Checks. A check can be sent to the shareholder's address where they can go. Or dividend warrant. We will see most commonly companies are using dividend warrant, which is also like a check where they give you a covering letter where they will say that so much amount has been transferred for so many shares you are holding and this is the amount of dividend on each share. So I'll also show you how dividend warrant looks. This is how it normally comes, or any kind of electronic mode. Now this is how a dividend warrant looks. So dividend warrant is nothing but a check by the company to the shareholder for payment of the dividend to the registered holder of the shareholder. So this is how a dividend warrant looks. So they will say it is valid only for 3 months. It will cover the folio number, that is your number of the client. Pay to Rajesh Mehta sum of rupees this much, and they will give you, okay, the details. So this is our dividend warrant. This is another example where a dividend warrant has been issued. So they'll give you the number of shares, the warrant number. So they'll come to know that so many shareholders are there. Each they will give a warrant number, the receipt number of the, like how you have check number, here this is the warrant number. On how many shares, how much amount you're going to get. So with this, he can deposit in his bank account the dividend amount. So this is also another way which has been issued by State Bank of India. Okay. So this is also a dividend warrant. They will give you the details, that the details will be given here, and they can issue you a check. So with this check, you will deposit in a bank account and it will get credited. So with this, they will send this covering letter, that how many shares, etc. Because if they are giving you a dividend amount, a check of let's say 3,000 rupees, you should know na 3,000 rupees against how many shares, what is the dividend amount. So separate letter can be given. Collectively it is called as dividend warrant. Something like this also can be issued. This is a dividend warrant, another example. So formats are different, but concept is the same. They will give you the warrant number, that is this number, specific unique number. They will give you the folio number, that is your client ID. They will give you the amount and you will deposit this and it will be there. Okay. So then comes no dividend shall be declared or paid in failure of repayment of deposit. Very, very simple. If the company is already defaulting in some of its deposit, कहीं और already loss कर रहे हैं, कहीं और default कर रहे हैं, there is some default. So then they are saying then you don't give dividend ना, you first rectify the default. वहाँ पे पैसे नहीं दे रहे हो, यहाँ पे पैसे profits बांट रहे हो. So there you are making losses, there you are not paying the amount of deposit, and here you want to distribute profit. So they say no dividend can be given till you rectify the failure. So a company which fails to repay the deposits shall not be allowed to declare dividend in the respect of its equity shares. Next, if we see section 124, very, very interesting, and we'll try to learn all the sections in order also. First, section 123 talks about declaration of dividend. Dividend has to be declared and it has to be paid to the shareholder within 30 days. This much time, within 30 days, it should be paid. Okay, and we'd also seen that from declaration within 5 days, 5 days I have to open account and deposit the funds there. Okay, from declaration, so I'll call it as date X. From here till the next 30 days it has to be given. Now section 124 says that if this dividend was unpaid or for some reason it was unclaimed, okay, it was unpaid or unclaimed for 30 days, then in the next 7 days you have to deposit into a unpaid and unclaimed dividend account. Okay, in next 7 days from end of 30 days, Okay, so let's say 30 days ends here, then in the next 7 days you will open a unpaid and unclaimed dividend account. From here till 7 years it can be in this account. After that it should be transferred as per section 125 to Investor Education Protection Fund. Clear? Now once it has gone into unpaid and unclaimed dividend account, from here in 90 days it should be, all the details of those shareholders who not got the dividend should be put up on the company's website. Till here it is clear. So section 132, 133, 134. Now let's look at the provisions as given in section 124. What they are saying, that payment of dividend, where the dividend has been declared but could not be paid or claimed within 30 days from the date of declaration, then within the 7 days from the expiry of the said 30 days, you have to transfer it into a scheduled bank account and create a called as unpaid dividend account. The details has to go details of the unpaid dividend has to go on the website within 90 days. Within 90 days of making the transfer, you have to have a separate account. Within 90 days from the date you transfer in the unpaid and unclaimed dividend account, you have to put the details of the persons who did not get the dividend and put it on the company's website. Effect of non-transfer of dividend. If the dividend is not transferred as stated, then it has to be transferred along with interest at the rate 12%. Claiming of unpaid or unclaimed dividend account. So then if it is there in this account, any shareholder later comes, he can claim this amount and their procedure has been laid down. Now transfer to IPF from in this account, it can be there for 7 years. In the unpaid and unclaimed dividend account, it can be there for 7 years. After that, you have to mandatorily transfer it to Investor Education Protection Fund. Any amount transferred to the unpaid dividend account remains unpaid or unclaimed for a period of 7 years. Such amount shall be transferred along with the interest accrued to IPF. So section 123 talks about declaration and payment of dividend. From here till section 124 talks about unpaid and unclaimed dividend account. Unclaimed dividend. From here till 7 days. Okay. 7 years it will go into Investor Education Protection Fund under section 125. Clear till here? Now this is a new part which you will mark it as important. Okay. Important amendment. Okay, through the amendment. Shares to be transferred to IPF. Now pay attention to what I will be explaining. Very, very important. Okay. If company has declared dividend, okay, for 7 consecutive years, 7 consecutive years, okay, dividend has not been claimed. 7 consecutive years, dividend has not been claimed in any of the year. In any year. Then we believe that the shareholder is only not interested, or he is no longer alive, or is no longer available only. So his shares will also get transferred to IEPF. Clear till here? His share will get transferred, his voting rights will get frozen. So not only dividend will be transferred, but even the share will go away. So it's very important for them to claim the dividend. Till here it is clear? Yes or no? Is this much part clear? Now, all shares. Now, all shares of which unpaid or unclaimed dividend amount has been transferred, okay, has also dividend and not been claimed for 7 consecutive years, the said shares shall be transferred in the name of IEPF fund. Any claimant can come forward and claim. Now pay attention to what I'm saying again. Let's make some years. 2000, 2001, 2002, 2003, 2004, 2005, 2006 and 2007. Till here it is clear? I want to explain something very important to you. So pay attention. Now, company declared dividend here. So this was the dividend declaration. Okay. Then company declared dividend here also. Dividend declaration. Then company you declared dividend year also. Okay. Now in this, pay attention to what I'm explaining. Okay. Now in this, company has declared dividend in 2000. Another time they had declared dividend in 2002, and another time they had declared in 2007. Now, if the shareholder for 7 consecutive years, has not claimed even one dividend, he has not claimed any dividend for 7 consecutive years, then his shares will be transferred and frozen. Then shares are also transferred and his voting rights will be frozen. Till here it is clear. Now you tell me, after reading the Okay, so now can you just confirm if you all can see and am I visible? I think there was some technical glitch. So can you all just confirm in the chat box whether I'm audible and visible? Yes or no? Am I audible and visible? So I'll just continue quickly. Okay, great. Yeah, thank you. Now let me explain a very important point to you all, a very important thing which they can ask you in the exam. Now understand, if the dividend is not claimed for any of the 7 consecutive years, okay, so out of any of these years consecutively he has not claimed, then the shares are also transferred. Means what? Let me give you an example. Okay, this dividend was rupees of 50 only, of let's say 500. Now this dividend, he said, now leave it, now I was out of India, the dividend was declared, now I don't care for it. He never claimed this dividend for 7 consecutive years. The dividend went into IPF. Okay, and he doesn't care because it's very small amount. To apply for dividend etc. was a longer procedure. So this dividend he let go. This dividend 1 he let go. Dividend 1 he said let it go. But the other dividends that was in 2002, 2005 he claimed. Will his shares be transferred into IPF? Will his shares be transferred? See, one dividend was unclaimed for 7 years. So that amount will go, that dividend amount will go to IPF. But for 7 consecutive years, if any of the year he has not claimed any dividends, if he has claimed dividend 2, that means we believe he is alive, we can't forfeit his shares. If dividend 3 he has claimed, so within 7 consecutive years, whichever year dividend declared, if he has not touched any dividend or made any attempt to claim, only then his shares will get forfeited. So understand, when the dividend gets transferred to IPF, and understand when shares get transferred to IPF, Investor Education Protection Fund. Dividend, if unclaimed for 7 years, will get transferred to IPF. Shares will get transferred to IPF if no dividend is claimed in any of the 7 consecutive years. Concept clear? Concept clear? Yes or no? I want you all to put in the chat box. Now, if a shareholder later realizes that, oh my god, I have so many dividends and my share has been forfeited, my share has only been blocked, so now I want to claim my share, then what is the procedure to claim the shares? Any claimant of shares shall be entitled to claim. They have to follow the procedures. Rule 6 sub rule 5, okay, provides that IPF form 4 is the form to claim your shares back from the IPF authority. Clear till here? If my shares only got forfeited, my shares got transferred to IPF and I want to claim it back. So you have to fill form IPF 4. Explanation. If for any year during the said period of 7 consecutive years, the shares shall not be transferred if any of the dividend has been paid in any year during the 7 consecutive years. So this is what I was explaining. That in case any dividend is paid or claimed for any year in the said 7 years, the shares shall not be forfeited. The offense and penalty has been given. Okay, subsection 7, that they shall be liable. Company fails to follow, they shall be liable to 1 lakh rupees penalty, and even the officers will be liable to penalty. Now look at this graph, you'll get a better understanding. Moment dividend has been declared, within next 5 days you have to deposit the amount to scheduled bank. Okay, in max 5 days. Now from date of declaration it should be paid to the shareholder by within 30 days. If within 30 days he could not be paid or could not be claimed, then within the next 7 days you have to open a unpaid dividend account, and if there is a delay in transferring, then with interest 12% you have to transfer in the unpaid dividend account. Now from unpaid dividend account till 7 years it is still unpaid or unclaimed, then that amount will go into IPF. Clear? So this is given under your section 123. Unpaid or unclaimed dividend account is given under section 124. IPF is given under section 125. Clear till here? Just take a screenshot, you will understand all the timelines. Now section 125 talks about IPF, Investor Education Protection Fund. So the central government has set up from where the credits will come into IPF in this Investor Education Protection Fund. Unpaid dividends will come here for 7 years. State government grants, central government grants from 1956 Act, whichever amounts were there in IPF, which was set up under 1956, that will get transferred. Any amount received from disgorgement of funds. Disgorgement means there is a big scam, and in the scam the company collected, the government authorities collected some amounts. All this amount will go into IPF. Any kind of maturity of deposits, interest, accrued, all of those will go here. Now where can this amount be utilized for? Once we know from where the amount will get credited, how I can debit the amount, how can I debit these funds, where all these funds can be used. The fund in respect of unpaid dividends, when it could be utilized, someone is claiming unpaid dividend, he came back to life after 7 years, after 7 years he wants to claim. Second, I can use this investor education and protection, so I will use it for investor education and protection. Distribution of disgorged amounts among the identifiable applicants. So disgorged means any kind of stolen amount or any kind of siphoned funds or any kind of funds which were wrongly earned. You will take it, and if you realize that this person was the correct owner, you will give it to him. This person was the aggrieved owner, you will distribute there. For legal expenses to take class action suit on behalf of investors. Sometimes SEBI takes action, so the money from where it will come for the lawyers. So IPF account can be touched. Any person claiming the amount under IPF may apply to the IPF authority for payment of the fund. Now what is IPF authority? Central government has constituted a separate authority called as IPF authority to oversee this fund. Now understand. This is your Investor Education Protection Fund. There is a lot of money in this fund. There's going to be a lot of money in this fund. Yes or no? A lot of money in this fund. government grants, unpaid dividends, all the investments, everything. Now what happened? This is a entire fund. So we have created an authority called as IPF authority. Who will see from where all the debits are being made, where all money is being utilized, etc. Anyone wants to claim money from this IPF fund, you have to make an application to IPF authority. The IPF authority has made certain forms, IPF 1, 2, 3, 4. I will show you all the form numbers. Then comes section 126. What does section 126 says? That when there is a pending transfer, of shares, now we don't know whether to give to the transferor or we should give to the transferee, because right now we are still in the process of completing the transfer. During that, dividend has been given. So let's understand with the help of an example. Mr. A is the transferor of shares and Mr. B is the transferee of shares, the buyer of the share, and this is the seller of the shares, and this is the buyer. Now both of them have entered into a transfer deed, given under SH4. Transfer deed has been given to the company. Company gets 1 month's time. If you read section 58 section 4, it gives you time to transfer these shares. Now pending transfer, during this time the transfer is still pending and company gave dividend and company declared dividend. So the question comes, what is to be done? Should we give it to the transferor? But the transferor has already said give it to the transferee. So then they say, what should we do here? So then they say keep it in abeyance. So what we will do, the dividend, only after the transfer is complete, we will give the dividend, right? Because right now we don't know where to give, transferor or transferee. So we will keep in abeyance. Now what do you mean by abeyance? Means you will keep it in the side. You will keep it separately. Once the transfer is complete, then we will identify the correct owner and we will give it to the correct owner. Concept clear? So dividend during pending transfer will be kept in abeyance, and once the transfer is completed, it will be given to the concerned party. However, there is one thing. If the transferor has given in writing that transfer the dividend no matter what, so then the company can give dividend directly to the transferee. See. Where an instrument of transfer, that's a transfer deed, has been delivered to any of the company for registration, okay, and the shares on such transfer has not been registered to the company. The transfer of such shares has not been registered, so it is a pending transfer. The transfer of the dividend shall be kept in abeyance. The dividend shall be kept in abeyance. However, it shall transfer the dividend to the unpaid dividend account unless the company is authorized by the registered holder in writing to pay such dividend to the transferee. Means company will transfer the dividend, will keep it aside till the final decision is made. However, if the transferor has given in writing, the company is authorized by the registered holder in writing that pay this dividend to the transferee directly, even if it is pending. I'm not going to claim. So then the company can declare. Clear? So where an instrument of transfer has been delivered to any of the company for registration, the transfer of such shares has not been registered till now, then the dividend will go in abeyance unless the transfer of dividend will go to the transferee if the registered holder has given in writing, the transferor has given in writing that give it to the transferee immediately. Then section 127 talks about punishment for failure to distribute dividend. So every director who's in default will get 2 years imprisonment or fine. Company shall also be liable. Now this is what is important. Section 127 also gives the defenses. The defenses where company is not liable. So as a company lawyer, you will try to fit your company into this circumstance, any of this scenario, where the company will not be held liable. Now, where the dividend could not be paid by reason of operation of law, there was a death of the holder. So that is why we stopped the transfer. Now, why did the company not give the dividend? So if they can give any of these justification, then it is fine if the company did not give dividend immediately. The shareholder had only given dividend and such directions could not be complied with. If the shareholder has given some directions and we are following his directions, or he has given some condition and the condition could not be fulfilled, so then we will say because he only told us, so we followed his instructions. Next is there is a dispute, so that is why we didn't distribute. Second, where dividend has been lawfully adjusted against any sum due to the shareholder, from the shareholder. Shareholder had to pay us some amount. We adjusted that. Okay, we adjusted the dividend against the due. So there was an example case where there was an old lady. Okay, her dividend was given to her. Dividend was there. What did the company do? They adjusted the dividend amount against the unpaid amount on share. Unpaid amount on share. So the shares were partly paid, because of which she was not getting dividend. So what did the government, what did they do? Whatever was the dividend amount, they adjusted against the unpaid. Partly paid shares were made fully paid with the help of the dividend. Or if another example if I have to give you, that the shareholder had to pay the company for whatever reason. So if the company has dividend which it has to give, they can adjust it, set off. Where any other reason, the failure to pay dividend or to post the warrant within the period was not due to the fault on part of the company, then the company will not be held liable. For example, I sent through post, but the post office there was a strike, so I will not be held liable. So when the company will not be held liable, if there was a dispute on the shares, the shareholder had given some restriction, there was transmission of shares, there was a death, operation of law, it was adjusted against some dues, or it was not my fault, it was it could not be posted due to reasons of other person. Okay. Then they have brought in some new rules, okay, which is called as your IPF rules 2016. Now this is also very important. IPF is once the amount goes into IPF, then how the shareholder can claim? He will claim not only his dividend, he will also claim his shares, right? So they have given you all those reasons. See, to regulate the IPF fund, they have made an authority called as IPF authority. Clear till here? Fund authority. So they will oversee all this. In this fund, what all things can be credited? Dividend amounts will also be credited and shares will also be credited. Then statement to be furnished to the fund. Now very, very important. Any amount required to be credited by the company to the IPF fund shall be in IPF 1. Okay. So company is there. Company has unpaid or unclaimed dividend for 7 consecutive years. 7 consecutive years. So obviously what the company will do, they will transfer to IPF. They will transfer to IPF. In which form? In form IEPF 1. So company transferring the IPF money to the IPF fund is called as it will be in form IPF1. If it was of the older act, that is 1956, then IPF1A was there. IPF2. Now what is IPF2? It is most important, and in my opinion this will come in your exam. Okay, now why is this? Let's understand that every company, now this is applicable if you will be a company secretary, you will have to file form IPF2. This is a every year compliance. See, every company shall within 60 days after holding of the AGM, okay, identify the unclaimed amounts from the close of the financial year which has been put on their website, and a statement or information of the unpaid or unclaimed amounts for each of the 7 previous financial years through the IPF will be given, along with the names of the person, the amount to which each person is entitled, the due date for transfer to IPF fund, and such other amounts. So IPF 2 is a annual compliance. Every company shall within a period of 60 days after the closing of the annual returns give a statement of who all are the pending persons to whom dividend is given and how much in form IPF 2. So every year IPF 2 is to be filed when within 60 days of AGM, or when the AGM should have been held. Giving what details? Giving details of unpaid or unclaimed dividends along with name of shareholders. Clear? First was about a transfer form to transfer into IPF 1. This is 2 is a every year giving details. No amount is transferred here, only details is given. Now they are talking about manner of transfer of shares. Okay, that if shares are unpaid or unclaimed dividends for 7 consecutive years, in each of the 7 years no dividend was claimed, then the shares will be transferred. Now how will you transfer? First, if the shares are held in physical form or the shares are held in demat form. If it is in demat form already, then what they have said is IPF authority will open an account with a demat account will be opened. IPF demat account will be opened. From here, shares will be transferred into this IPF demat account. Clear till here? From the shareholders, company will transfer the demat shares of the shareholder to the demat account of the IPF authority. If it is physical form, then they will first have to convert into demat. They will have to make the demat, they will have to dematerialize it, and then they will have to transfer this to IPF authority's demat account. Clear till here? So the shares shall be credited to demat account. Shares credited to demat account of the authority. So the demat account of the authority will be there. Will be opened within 30 days of such shares becoming due to be transferred. All the details will be given. Now this is IPF 3 is about the shares that is going to be transferred. Okay, the company shall not transfer the fund provided the company shall furnish the details of the unpaid shares to the authority in IPF 3 within 30 days. Where the shares are held in demat form, you can directly transfer it to the demat authority account of the authority. If the shares are in physical form, then the company secretary will have to first shall make an application on behalf of the concerned shareholder to the company for issue of new certificates, and in the new certificates they will make issue in lieu of share certificate number for the purpose of transfer of IPF. If the shares are held in physical form, so then they will have to make a new certificate called as issued in lieu of share certificate number for the purpose of transfer to IPF, and then the transfer will be made. After issue of the new share certificate, the company will inform the depository by way of corporate action to convert the share certificates into demat form and transfer it in favor of the authority. So this is what I told. Okay. Then we'll see the other forms. Now Rule 6A. This is super important and it is come through an amendment. Okay. So you should know it and mark it as important. In my opinion, this will come in the exam. Okay. This will come in your exams. Now let's see what is this. Ministry of Corporate Affairs notifies the authority. Okay. They have inserted Rule 6A, which specifies the manner of shares, how it is going to be transferred when Section 90 is concerned. Section 90 talks about beneficial owners. Section 90, register of significant beneficial owner. Now, SBO. Now, what is a SBO? Do you all know? Can you put it in the chat box? What is a SBO? In a company, who is a significant beneficial owner. So in Section 90, they say they cover details of significant beneficial owner. Who is a SBO? Every person who holds significant beneficial interest of not more than 25% in the shares of the company. Okay, this limit, government can keep it 10%, whatever, but not max. Okay, they can keep it as they want to change. What they've said in the act, that every individual who holds beneficial interest of minimum 25% in the company will be treated as a significant beneficial owner. He will have to make a declaration that he is a significant beneficial owner. So SBO is a person who is holding minimum 25% shares of the company. Clear till you? Very simple. Who is a SBO? Significant means 25% of the shares. He has to give a declaration to the company in a specified form that yes, I am a SBO. Further, the company is required to give notice calling out the prescribed information to any person whom it believes to be a significant beneficial owner. Company can also call in that I feel you already hold 30%, please give the notice. Now, on failure of such notice to give satisfactory information, the company may apply to the tribunal for directing that the shares subject to the restriction concerning the transfer of interest, suspension of all the rights and such other matters as the tribunal may feel. The person aggrieved may make an application for relaxing the restriction. What you need to know here, SBO is a person who is holding 25% or more shares of company. Clear till you? This is given in Section 90. Now, why is it coming in dividend and dividend authority, regulations, etc.? Because this authority, this SBO has to give a declaration. If he fails to give declaration, if he fails to give declaration, then his shares will get forfeited and never can be returned to him. See, now pay attention to what is the important point. Transfer of shares to IPF. If no application is filed within 1 year, such shares shall be transferred to IPF created by the government. Market is very, very important. That if the significant beneficial owner has not given the declaration that I am a beneficial owner of the company, within 1 year his shares will get transferred to IPF, and these shares can never be returned back to or claimed back by the significant beneficial owner. The reason why we are keeping, because we find this very important, that SBOs must declare that they have interest in the company. Rule 6A specifies the procedure for transfer of shares to IPF authority. The shares will be credited to the demat account of the IPF authority within a period of 30 days. Shares will be credited to the demat account of the IPF authority within 30 days of they becoming liable to be transferred, and they will be deemed to be transmission of shares, that is transfer by operation of law. These shares can never be claimed back. The company secretary will authorize and do the necessary filing. The voting rights will be suspended, obviously, since it is transferred. If it is delisted from the stock exchange, then the IPF authority will give these shares, because the SBO will no longer be entitled to these shares. If the company is wound up, the authority will surrender these securities to the fund. Now, Form 4. The company shall send a statement to authority in IPF 4 within 30 days of the corporate action taken, containing the details of transfer of the shares. So IPF authority, while section 124, it remains unpaid, normally you can claim it back. Transfer to IPF can be claimed back, but transferred under section 90 subsection 9, that is for SBOs, the shares transferred can't be claimed back. It is because a restriction on claiming the shares transferred to IPF for failure to give disclosure is considered to be very, very important. Clear till here? So SBO shares transferred cannot be claimed back. Refund from the fund. Obviously, any person who has now got up after 7 years realizing that his funds are there, he will have to go to the website of IPF, that www.ipf.gov.in. He has to fill form 5, give the details, and he can claim it back. Okay. The IPF, the officer, will then speak to the company, verify in IPF 2 whether the company has given his name, what amounts they have given. An application received from fund verified by the company shall be disposed of with the authority within 60 days from the date of verification report from the company. So if the IPF authority receives a refund application, so they will ask the respective company, they will check in the IPF 2, and then they will refund the amount. So these are the form numbers. From your, when you're transferring amount to IPF fund, it is in IPF 1. If you, every year that you have to transfer statement of unpaid and unclaimed amount is IPF 2. IPF 5, this 3 and 4 are for shares. Transfer, the 4 is for transfer of shares to IPF fund. 5 is application to authority for unpaid amount. So if you want to claim the amount for you, this amount, this will be very important. If I tell you that your shares have been forfeited, your shares has been transferred to IPF, go and claim. Which form number you will file? So this is the form with the investor files for refund. Okay. Statements of amount credited on account of shares transferred to IPF. Now, smaller thing, difference between interest and dividend. Dividend is given to shareholders, interest is given to the creditors of the company. Okay, dividend is not mandatory. Interest, when you take loans, is fixed and mandatory. Okay, dividend can vary, more, less can be given. Interest will be fixed. Then comes distribution of profits in other kinds of companies. First, they start off with Section 8 companies. Section 8 companies are NGOs, non-for-profit companies. Okay, Section 8 companies cannot distribute dividend. They are prohibited from distributing dividend to its shareholders. Nidhi companies, they have put an upper limit on how much dividend they can give. A Nidhi company shall not declare dividend exceeding 25% okay, of the amount, and following the condition that an equal amount shall go to general reserve, there should not be any default and it should comply with all the provisions. Then we know difference between equity shareholders and preference shareholders. Preference shareholders could be many kinds. Cumulative is if dividend not paid due to inadequacy of profit in any year, that much amount will be carried forward and next year it has to be given. So the dividend will accumulate. Here, if dividend could not be given, it will not be carried forward. You will lose it. In the next year, you will get another dividend. No areas of dividend will be carried forward in future. Then, if we see all the provisions that you need to know, in Companies Act, definition is given under section 2, subsection 35. 123 talks about declaration of dividend. Rule 3. Here we'll have to read. Rule 3 says dividend in case of inadequacy of profit. If within 30 days it is unpaid or unclaimed, the next 7 days it will go to unpaid or unclaimed dividend account, section 124. For 7 years, if it is unpaid or unclaimed, then it will go to IPF fund. They have given you from where you can claim, debit and credit will be given details. 125 says if it is a pending transfer, then it will be kept in abeyance. Section 127 says the failure to distribute dividend. Punishment. So it also gives you the punishment, it also gives you the defenses. Defenses are also very important. Rule 3 is there, important. Okay, then this you can remember, your obligations under LODR. Okay, regulation number 2930 says whenever before prior meeting. So this is before the meeting, you have to inform stock exchange. This is after the meeting, you have to disclose the details of the dividend to the shareholder, to the stock exchange. 42 talks about record date, book closure dates. 43 talks about dividend. This is very important. 43A, dividend distribution policy. We'll come to this in some time. Dividend distribution policy, very important. SS3 talks about secretarial standards. Now we will see certain procedures. Now if you know the provisions, you will easily be able to write the procedures also. Now they have given you different kinds of procedures. One is procedure for declaration of interim dividend. Second is procedure for declaration of final dividend. Third is procedure to declare dividend out of the reserves. Rule 3. And procedure for transfer to IPF fund. Transfer the shares of the dividend to IPF fund. Let's see. Just few points you can read through, you will come to know. Now remember, any procedure that comes, you have to remember first. I'm giving a shortcut to any kind of procedure, how to remember. Now procedure will look very big, but you can nicely solve it with this technique. First, any procedure you will say that the article should authorize. Article should authorize. Second, you will say that if it is a listed company, prior intimation will be given under regulation number 29, and after the meeting you have to inform, subsequent to the meeting you will inform in regulation number 30 of SEBI LODR. Any procedure comes. Third, to decide anything, who will decide? All the major decisions are taken by whom? Or every single decision is taken by the board of directors. So board meeting has to be convened. You will have to write the notice of the board meeting. Notice of board meeting is given under section 123. Okay, subsection 3. Then you will write that the time, place, agenda will be given. If it is online, if it is going to be video conferencing, that also has to be told. Then you will convene a board meeting. Then you will go forward to convene a general meeting. Okay, whenever you call a general meeting, you have to again remember that section 101, 102 is followed. Notice of meeting. This is said a explanatory statement has to be given. If you are doing anything, special business is being done, explanatory statement will be given. Then if a special resolution is passed, then you will write that MGT 14 has to be filed with the ROC. Now after this, then you have to remember the section or the provision specific content will come. Provision specific content will come. Means what? Now you have to remember which topic are you doing. You are doing dividend. So if they say interim dividend, then you should remember that provisions for interim dividend between two depreciation should be given. All those details you will write. Then you have to think and try to recollect. Dividend is given, you have to update the registers. Dividend warrants has to be dispatched. So then remember your section numbers 123 to 125, 127. In that, whatever is there, that all you will write. Then we will see the rules we have done. So you have to recollect all those and then write it in your books. And that is enough to build off an answer. So generally they don't ask you procedures that much. See, AOA should provide 7 days notice should be given. Regulation number 29 will be given. Then while computing what all will be discussed, all the details should be given. Okay, then regulation number 30 will come. One important thing is whenever you're giving any corporate benefits, the book has to be closed. So book closure date will be there. What is a book closure date? So the shareholders appearing on that day whose names are mentioned on the book closure will be entitled to the corporate benefits. You will close the register of members. You will come to know who all are the shareholders and to whom you will give the members. Then remember that 5 days, 7 days, 30 days, 90 days for putting on the website and 7 years. So all that you will write. Then you will also say you will have to make arrangements. You will have to appoint intermediaries. Okay, company secretary. You will have to appoint registrar share transfer agents. You will have to hire some depositories, etc. All this you can write. Then you also think that if it is a foreign shareholder, you have to take RBI approval, the taxation has to be covered, etc. Then procedure for declaration of final dividend. Same points will be there. You notice everything will be the same, but now you will write MGT 14. Okay, so all the provision that we have just done, you have to write it in the books. Now remember I told you one is very important, that is a dividend distribution policy. Now if the earning per share is there, let's say if the earning per share is rupees 10, how much dividend should be given and what should be the dividend payout ratio and how much should be transferred to the reserves? How much should be transferred to the reserves? Can you tell me? So then 5%, 6%. So then they say that there has to be a policy for dividend distribution. They will tell you when dividend should be declared, how much dividend should be declared, when dividend should not be declared. All those policy will be given. That is in your regulation number 43A, covers your dividend distribution policy. So regulation 43A says the company shall, the top 500 listed entities on market cap every year shall formulate a dividend distribution policy and disclose in their annual reports. The dividend distribution policy shall include the following parameters: circumstances under which the shareholder will not be getting dividend, financial parameters to consider while declaring dividend, internal external factors to be considered, what are the provisions with respect to reserves, etc. The proposed provided that if the listed company declares dividend on the basis of the parameters in addition to point A to D, they will have to disclose those parameters. Listed entities other than top 500 may disclose the dividend distribution policy. Then you will close the register. For final dividend, remember you have to give a ordinary resolution. You have to take a ordinary resolution. Okay. Then it comes procedure for transfer of unpaid to the fund. So all this we have done. IPF 1 is in the old Act, 1956 Act. Okay, so all this we have covered. That is it. Okay, so we'll just see the past exam questions for dividend. So let's see what are the dividends. So also remember, I've covered with the amendments. Okay, distribution of profits. So the company has summarized the following data. Okay, free reserves, revaluation reserve, profit, net loss. The company has paid a dividend of 8% this in the immediate preceding year. Maximum amount they can declare as dividend. Now what they have said, rule 3, right? Rule 3 they have given you. You will have to do the calculations and then put it up. So the 4 calculations all you have to do. Then dealing with a dividend is a prerogative, that is a right of the board of directors. However, there are certain parameters included in a dividend distribution policy. What is a dividend distribution policy? So these are there. You have to come find out. Then company wants to declare dividend without adjusting the losses. So that is not allowed. All those. And that is it. Okay. So we are done with the dividend chapter also in detail. Now okay. So we covered all the dividend questions as well. Okay. Now today, for today's marathon, I will do this much. Okay. And I think just someone has asked a question, when the dividend money is transferred to escrow account. Now escrow account is not given here. Escrow accounts, understand, escrow account is a temporary account made for a temporary purpose. So generally when there is like takeover, they tell to open a escrow account. Clear? So when the person is not available or the law has told to open escrow account, then you will make a escrow account. For today we'll be doing this much. I've covered 2 chapters in complete depth. You can go ahead, study those. Which you want for tomorrow's marathon, once the lecture is over, there'll be the comment section. Let me know whether today's chapters you could understand perfectly, and also which chapters do you want me to take up tomorrow. Okay, I have already taken up one set of marathon earlier. You can go ahead, refer those notes. I have taken up share and share capital complete depth with the past exam questions. So in my YouTube channel you can just go and check out. Okay, what happens to the amount in IPF? It is utilized for investor education protection fund, for educating investors, having ads, helping investors in future. If there is any, so that is where the debits can be done from IPF. It can be invested also, all those funds. Clear? So if someone has asked for a refund from the IPF fund, they will return it. So I'm done with my session. I want you all to write in the chat later in the comment section which topics do you want for tomorrow. Remember, I have completed the main chapters have been completed. Okay, even directors, if you just YouTube it, you will get my lecture for sure. Okay, directors full depth I have covered. Share and share capital I have covered just recently in depth. Okay, these are big chapters. Yes. So is that maintained with SEBI? So central government has set up the fund, so they can use, and mostly SEBI is the one which can utilize these funds as well. Okay, then share and share capital I have covered. I have also covered charges in complete depth with amendments. So go to my lecture in my live sessions only. You can check it up in our YouTube channel. You will get this lecture also. And there is a past marathon. I have made a playlist for marathon 2022. So from there you will get all my lectures. You will be able to study and complete it with the past exam questions. Wish you all the very best. Let me know what else you need, and also don't forget to hit the like button. Thank you. Do join the WhatsApp groups given in the description, and the Telegram group link has been pinned in the chat box. Thank you. See you all tomorrow.